Do you like money? If so, this is the podcast for you. Welcome to the Real Estate 401k Show with your hosts Ryan Gerdes, Mike Weinstein, and Justin Frederick, helping you build a legacy of wealth through real estate. Powered by the Real Estate 401k Group at West USA and the Frederick team with Fairway Mortgage. NMLS number 625918.
Welcome back to the Real Estate 401k Show. I'm your host, Mike Weinstein, alongside Justin Frederick and Ryan Gerdes. It's so good to have all the boys.
It's been like
in the
2 months.
house.
Yeah, dude. It's
For sure.
I was gone, and then you were gone.
Yeah.
And yeah. So how did you deal with life without us, Mike?
Oh, gosh. Well, some of those bottles behind you are half empty.
Yeah.
So I got a little heads up.
Or half full. All right, you pessimist.
Depending the way you look at it, you know.
Well, if they're half full, pass one down right now. All right, you're going to want to text the word RATE to 623-AZ-RECON. That's RATE to 623-AZ-RECON. So it's always important to note when our viewers are listening to these episodes or watching them on YouTube, however they consume their podcasts, we always pre-record these the week before, so we might be talking about something and then the information may have changed. So just want to throw that out there. But Justin, obviously rates have been in the news, and sometimes they're down, sometimes they're up, sometimes they're down, sometimes they're up. I can't figure it out.
Yeah, just keep in mind that interest rates are forward thinking. We're not looking at what's come out now. It's expectations of what's going to happen. And so that's how they work on inflation, treasury yields. And
because I all the time we'll have like a rate increase or decrease, and then I'll have clients call me up and say, "Well, the Fed just cut rates or raised rates," and so what can we expect? And I'm like, that was baked in 2-3 weeks ago,
correct.
buddy.
Yeah. So they met in Jackson Hole. It was like end of August. I want to say August 22nd. Fed came out and said, okay, weakness in the labor market. We're going to be lowering rates. And so the futures went to 100% rate drop in September, 70% in October, 40% in December. So that all got baked in basically in that single period of time. And then we saw some more jobs reports come out, more weakness in the labor market. However, inflation numbers have been showing increases, so that kind of balanced it out a little bit. But yeah, Fed spoke on September 17th, and basically what he said was, the only reason why we lowered the rates was there's weakness in the labor market, not showing like real big signs of weakness. But if you look at reports, there's massive weakness in the labor market. And the inflation numbers just seem to be way off on what they're looking at.
Yeah, man, like it used to take an act of God to get some of these contractors to call me back, to go to get work done. And now they're freaking calling me up left and right. Like, hey, you got any work?
Right.
What's going on?
Yeah. I'm getting the phone calls from contractors right now.
Yeah.
Which is wild. Wild that you said that. I haven't seen that in years. Right. What's going on?
I'm just making sure I hit the button that we're recording on all cylinders.
This guy's climbing on the table.
Yeah,
I thought he was going to jump up here.
Our host is a 5-year-old.
Yeah. So when he spoke, he said just because of the labor market, but we're increasing the length of time to get to our target rate of 2% on inflation from 2026 to 2028, and the market hated that. I mean, we were seeing rates go down during the press conference until he said that, and then we saw a 45 basis point tank in mortgage-backed securities because of basically that single comment alone. And even ever since then, we've just been seeing slightly increasing rates.
If you woke up and you were handed the role of Fed chair, how would you change the system? Like, how can we simplify this for everybody?
Honestly, I would want to get the reports fixed. And I think that has a massive impact on what is happening right now.
Like
and when I say the
accuracy,
report, yes, accuracy with the labor market. I mean, if you look at the revisions on what has happened in the last 9 months on the BLS jobs report, Bureau of Labor Statistics, very inaccurate. Also with inflation numbers, do you know how they get shelter? What rents are for inflation reports?
Like consumer pricing and whatnot?
Yeah.
Like I know that they use like monster.com and jobbing.com for unemployment.
They call homeowners and ask them what they can rent their house out for. Not a real estate agent. They're talking to homeowners.
What the fuck are
on
you
what
saying
they
right now,
think
dude?
they
Really?
can rent their house out for. Now, if you ask me what I think my house is worth, at least I'm in the business, but I'm still not as educated as you guys on that.
Imagine if we just based the value of homes based on what homeowners thought their house was worth.
Agreed.
Hey, you know what? Let's appraise this house in this neighborhood. So I'm going to call 10 homeowners around that house and go, hey, what do you think your house is worth? And then come up with an appraised value.
I think they would do better just going to Zillow than they would calling up homeowners.
Yeah, I agree. And I don't know if you guys have seen this recently too, but I've had a couple of investment properties where my renters, their contracts are up. So I got to renew, and they're not renewing. And I've got these things on the market, and I've had to drop rent pretty significantly in some areas. I'm talking $350 because I'm not getting any traction. I mean, I have one property that's in a really good spot. I mean, I've dropped this thing almost 20%, and it's just sitting there. And now I'm like, I just need to get this damn thing rented. But to me, that's real life information on what's happening, and and people can't afford to live in my house. So they're going to find affordable housing.
Well, I just know I've never been invited to your house.
This isn't my house. And we know he's full of shit too, right, Ryan? I mean, he's so full of shit. But I'd like to see a better way at doing these reports. I think that our inflation reports, especially on shelter, but I think they're 6 to 8 months behind on what is actually happening. And I can't tell you exactly why, because I'm not an economist, but I mean, I follow this shit all the time.
Yeah. I'm going to put you on the spot here. And so I apologize if you don't know the answer to the question. And I know we said before we went on that we weren't going to get into a discussion about the government shutdown, because Monday when this episode comes out, who knows? Maybe they came to some resolution and the government's not shut down. How is a government shutdown, like if it's prolonged, how do you think that impacts interest rates, or does it impact interest rates?
Well, I think the major reason that it's going to impact interest rates for me is Thursday we get initial jobless claims. We're not going to get that report. BLS jobs report comes out on Friday of last week, guys. If we don't get those reports, I think that's going to play a role, because I'm expecting lower numbers on the job openings, and I'm expecting higher numbers on the initial jobless claims, and that can positively impact us. I think that it should work. I feel like it should work if the government shutting down. We're seeing a little bit of chaos in the market. It should help us, but I doubt it. I bet you it will be opposite, because people are going to be pulling out. More skeptical. Yeah, just trying to be conservative, especially the people with the money.
Well, I think, Ryan, for me, if my employment is not determined whatsoever by a government shutdown, and this government shutdown is prolonged, that means anybody who's affected by the government shutdown is completely out of the buying market. I think it's a little window of an opportunity for buyers and investors to go in. Okay, less buyers, houses have been sitting on the market, sellers are getting a little bit more antsy and ready to wheel and deal.
Right, and I mean, foreclosures weren't even a topic last year, even though we had seen massive increases in interest rates and whatnot, a year or two prior to. So now it's worth having that conversation because we're a pretty damn big market here in Maricopa County, and I just checked the other day, and I mean there's thousands now. So now we're starting to see more people start entering that market over there. And back in 2008, during the foreclosure crisis, et cetera, things were a little bit different. Since then, a lot of these secondary lien holders have been able to get pushed past Congress to still stay on a property even after foreclosure. And so I'm really interested to see how that's going to shake down, because there's going to be a lot of investors that get hurt out there. I was on the phone with an attorney this morning actually, and I was like, what if I go to the county courthouse steps and I win an auction on 123 West Main Street, and I buy it for $300? What survives that foreclosure? Now we all know that taxes, and federal liens will survive that, but usually you can get that information. That's usually public information, pretty easy to find out. But are you aware that solar still may have a claim on it? Like, if I go buy that, then there could be a quiet mechanics lien on it. And some of these people have signed $70,000, $80,000 solar loans on these things.
Painful.
And that investor or myself that just bought that house, thinking that he got a decent deal on something, I'm going to go over there and maybe flip it, or keep it as a rental, or possibly live in it, or whatever. I might be walking into something where now all of a sudden I have an additional $70,000 loan on it. I think that kind of practices that's being allowed is going to further hurt a lot of people that use real estate as a source of income, and so I still think real estate is one of the best and most safest forms of investments, but I think more than ever, there's not going to be, put it to you this way, there used to be investors and just common, people that, are just kind of doing it on the side that could go over there and hit home run after home run in real estate. I think that those people are going to be long gone with how the fabric of the industry is going down, and then then they have to turn around and have a huge question mark of what's the interest rate going to be in 2 months when I'm done fixing this place up, because we've seen super high volatility over the past couple of years with interest rates, and now with all the turmoil that's going on. And this is funny because I was kind of on the moon about this, because I didn't learn about this until a few moments right before we started doing this. But I'm over here like, I would think that initially it would have a massive negative impact on the market, and then maybe 6 months down the road, once they pull their head out of their ass and they decide, that was a really big mistake, let's go over here and compensate.
Well, as far as interest rates go, I was on a Zoom call today. Yeah, there's a projection of 5.9 before the end of the year, and it's valid based on the information that we have in front of us now. Whereas we hit the 6.125 September 17th, I think it's valid that we could absolutely get to 5.9 before the end of the year, which would be huge.
It would be huge, but to me that logic doesn't track, because if I'm investing in mortgage-backed securities and all I'm seeing is consistent increases, and et cetera, and government shutdowns, I'm pulling my money out of mortgage-backed securities.
Well, last time this happened, I think it was 2 days, and it was 7 years ago. I think it was 2 days, and they agreed upon the budget, and I feel like it's gonna be very similar. I think that Trump is sticking to his guns on what he wants, and I think he's not afraid to shut down the government in order to make that happen. And I think that's the play that is being made right now.
Cool. Alrighty, well, there you have it. None of us are economists.
No.
But we got opinions.
I mean, we got some experience looking at it a little bit.
We got opinions and experience that we would love to share with you. We have a saying on our team that money never disappears, it just moves. There's opportunities everywhere. regardless of where rates are at, regardless if there's a government shutdown. It just doesn't matter. There's opportunities everywhere, whether you're an investor or a home buyer, and would love to have that conversation with you. All you got to do is text the word rate to 623 AZ Recon. That's rate to 623 AZ Recon.